Hello, everybody. I'm Matthew Dixon, the founder of eBay.io cryptocurrency ratings, and I'm pleased to join you today and bring you the latest traders report on 3.0 TV. So we'll go through probably four different tokens. We'll begin with Bitcoin just to try and see where we are. Quite interestingly, these divergences have been very predictive. So first of all, we had a divergence right at the all-time high, where basically we had higher highs in price and corresponding lower highs in RSI. And that basically told you that there's going to be a downturn in price, and clearly that's happened, fallen quite a long way from the 124,000-ish area to as low as 107,000. We have climbed a bit since. We actually had another divergence here, which was a bullish divergence signal where we've got basically lower lows in price and corresponding higher lows in RSI. That told us that we're going to get a turn higher. So if by any chance, and I didn't, but if you had taken a short position, basically sold short, based on this divergence signal, you could have closed it here, basically as soon as you got the bullish divergence in place down here at any of these points potentially, particularly these 2 points here, you could have closed your short position and even gone long because it was bullish divergence. But we now actually have had some further bearish divergence. So basically, you can see here that we have lower highs in price and corresponding higher highs in RSI. And this one is actually called hidden bearish divergence. And it's telling you of a continuation of this downtrend. And clearly we can see that's exactly what's happened. So very, very predictive there in price. It's hard to say. I mean, I do believe that this is a correction to the downside. Again, we've had quite a lot of overlap. This movement up has overlapped this movement down. Even this movement up overlapped this movement down as well. So lots and lots of overlap there. So I believe that this is a correction. We've looked at this already. I won't go into it again. Longer term, it looks like a beautiful wave count with a very nice correction down to a wave four. Whether it's here, whether it's a bit lower, it actually doesn't really make a great deal of difference. It is a correction, so we'll complete wave four either here, maybe a bit further down here. I don't know for certain. Corrections are very, very difficult to call the absolute end because they can morph into double corrections, triple corrections, flats, zigzags, all sorts of variables there on the corrective waves. So, as I say, it's a correction of some sort to the downside. Whether it's finished or not, I'm not quite sure, but I am reasonably confident that following the completion of the correction, we will rise to new all-time highs for Bitcoin above that previous 124,500, so somewhat above there. But I think it could potentially be a final fifth wave to the upside. How high it goes, I'm not quite sure at the moment, but as I say, it should exceed that level. So on a risk reward basis, things are looking pretty good for a relatively limited downside, but quite a substantial upside potential on Bitcoin. Same sort of story, but actually Ethereum is very interesting. Again, we had a divergent signal here and another divergent signal here right at the all-time high for Ethereum. So basically, again, we got, I haven't drawn it in up here, but you can see we have higher highs on price and corresponding lower highs in RSI. That was telling you of regular bearish divergence, and it told you there was going to be a sell-off. Now, the sell-off appears to have taken place, substantial sell-off down here. It may have lower to go. Again, it's absolutely impossible to say for certain. But what I do like about this is we have wave three here in red, we have wave four in red, and potentially this could be the completed wave five in red. But I actually believe it's probably got quite a bit higher to go. So I've counted this first move up, which is itself in five waves, one, two, three, four, five. I've counted that as a wave one within this larger wave five in red. So we then have wave two and wave three up, which should take us to new all-time highs again. Interestingly, we shouldn't dip below this dotted red line. If this wave count is correct, not only couldn't dip below the red line, the dotted red line. If this wave count is correct, with this being the first impulse higher, then we get wave two down. Wave two cannot cross over and go beyond the start of wave one. So this is the start of wave one. So again, we had wave one, two, three, four, five. Nice Fibonacci relationship here. Beautiful one between wave one and wave three. Wave three was exactly 4.236, exactly 4.236 times wave one. Then we got a wave four down and a wave five to complete the larger wave one. And then, as I say, wave two, then we should get a larger wave three, four, and five to complete the five waves to the upside. Then I think we're in for a really substantial correction, but some way to go yet. As I say, risk reward wise, your risk is basically below this dotted red line, and your reward is potentially quite a lot higher. Not even limited to here, but quite a lot higher. So you've got more than 2 to 1 risk reward. Anything better than 2 to 1 is probably a good trade. It means that you only have to win half as many trades as you lose. So you can lose twice as many trades and still be overall in profit as long as your risk reward is better than 2 times. And this particular setup is better than 2 times risk reward. Looking at Solana, yeah, it's a little bit difficult to say. We had a buy zone down here, and it's actually been really nice. We've been in profit virtually all of the time from that buy zone. I'm still bullish Solana. I mean, more bullish than most tokens actually. And I think we will see some more upside at some point. Potentially, if it's a large W, ABX down, and then we can have potentially an A, a B down, and a C up. So it should take us quite a lot higher for Solana. That's just assuming it's a corrective count higher. If it's impulsive, it'll go much higher. But if it's corrective, even if we correct a little bit lower now to complete maybe this push down here, even so, we should still push higher again. So even again, risk reward is pretty good. I'd be interested in long positions and looking at buying dips. I don't chase prices higher, but if we do see further dips, I'd be interested in buying. XRP, I've looked at an alternative here. The past few days, I had this counted as a triangle, and it still perfectly well can be a triangle. This move here, which is basically potentially A, B, C, D, E, completed triangle here, and we should start to move to the upside. That's if it's a triangle. I put an alternative count here. It actually has the same overall outcome pretty well, but although the triangle would be finished round about here, we could count it potentially as a WXY. That's called a double correction. So one correction here is ABW, that's the W wave. Then you have a connect to X wave, which is an ABC for the X wave here. And then you have a Y wave, which is made up of 3 waves, so A, B, C for the Y wave. Now, potentially, if that's the case, we could have a little bit lower to go. I don't want to see it surpassing or going beyond this $2.65. I really don't want to see that. So I think we should stay above there. Again, risk reward is great with the risk being 265 and below. That's the risk, but the reward is very substantial looking above here. So a minimum sort of 267 area, somewhere around there, 266, 267 as a minimum upside. So risk reward, as I say, downside limited. I'd have my stop loss just below here. Upside substantial. This is way more than 2 to 1 risk reward. You can see the magnitude of the potential loss is that amount, and the potential gain is that amount. I mean, just off the top of my head, looks like about 4 to 1 risk reward. So these are fantastic trades. You place enough of these trades. Statistics say that if you get your risk reward right, and you place your trades with a little bit of thought and care, then you should win overall. You will take losses. Traders must learn to take losses, but overall, you will make a profit. So Jasmy, I'll just finish on Jasmy. We're touching that, what was a support line here. We did pierce it before, so it's highly likely we will touch a little bit lower. But what's encouraging for Jasmy is that we basically have from this low point here, I'll put the demonstration tool on so we can see here from this low point here with the red movement here, we've got wave one up, we've got an ABC down for wave two, we've got a 1, 2, 3, 4, 5 for wave three in blue, then we've got an ABC down for wave four, and then we've got a 1, 2, 3, 4, 5 for wave five. That for me is one of the clearest 5-wave moves that you will see. So being 5-wave move, this movement down here should definitely not go beyond the start of this wave here. So it's an ABC down. We can see here, it could even be a WXY, so ABW, ABX, ABY, that'll be A, B, and a Y wave down to complete. I don't expect it will surpass this level here. So I'm reasonably confident with Jasmy that even if we get dips, and I'll buy those dips, even if we see dips, I'm not concerned because this is an impulse higher. This is a correction down. It should be followed by an impulse higher, 5 waves minimum. So great risk reward yet again. The risk is actually right the way down to here. So there's a fair bit of potential risk on here. This is just 1.026 of a cent right down here at this point here. That is the risk to go beyond there. The upside is, up here, way above here. So again, it's probably you're looking about somewhere around about a 2-to-1 risk reward. So it falls within the parameters. Actually, if it were to dip a bit lower, it becomes better from a risk reward perspective to buy those dips. So I wouldn't be buying it just yet. There's a real chance it could dip a bit lower. But from a risk reward perspective, if we see a further dip, the risk would be your stop loss just below here, fraction below here, and the upside will be very substantial to the upside in relation to this downside potential. So that would become another great risk reward trade. Maybe not just yet, but as I say, if we see a further dip, and we may have been buying dollar cost averaging, by the way, on the way down. And if you have, it's just further opportunity to dollar cost average if we dip lower. And that's the beauty of dollar cost averaging. You're not committed all your capital at a high level. You're basically averaging down as we see further and further dips. And that's important when we see that we have an impulse higher and a correction down. We can actually be comfortable buying dips all the time. You can't allocate too much at any particular point because you need to keep having spare capital available to buy those dips if they come. So you'll just keep averaging your price lower and lower and lower for eventually, when with reasonable confidence you do push higher, you'll soon pick up all those profits along the way, and they'll then start to magnify as it goes higher. So that's really, nice, easy trading strategy that works very well. Just managing your risk reward. As I say, you don't win all, but it's a great way to make money over the long term. So hope that was helpful. Getting towards the end of the week, we're actually now less than 2 weeks away from the next rate decision. That rates are going to get cut at September 17th Fed meeting, FOMC meeting. So with that in mind, I think that we've not got much lower to go. I think the markets will start to react higher and start to give us something back of these, this decline that we've had. So yeah, thank you again for listening. Look forward to catch up soon. Bye for now.